Good evening. Welcome to Immigration Issues. Today we have a wonderful show for you. It deals with a topic we all have a major interest in, taxes. And I have a special guest here for you. But before I introduce our guest, I would like to tell you a little bit about the Chicago Legal Clinic. I'm Ina Winston, and it is my privilege to practice immigration and guardianship law at the Chicago Legal Clinic. You can probably see, I don't know if you can see it, we'll try and bring it in a little closer, our number, and hold on, I'm going to try and get it a little closer. Well, maybe not. The Chicago Legal Clinic was established in 1982 by Ed Grossman and then Father Paprocki, who was his classmate at DePaul Law School. It was established originally when the steel mills closed on the southeast side of Chicago, and the steel workers needed high-quality but low-cost services. This became our organization's mission, and today we have offices not only on the southeast side on 91st Street, which is our flagship office, but also where I work in Pilsen at 19th and Ashland, right across from St. Pius Church. We have offices in Austin and downtown. We handle a wide range of civil matters, from bankruptcy to family law, immigration, guardianship, social security law, and I'm sure I'm leaving out many other areas. If you have a legal issue and you think we can help you, please call us at the number on your screen, 773-731-1762. Is that the number up there? Well, that's the main intake number. 773-731-1762. So, what else can I tell you about the clinic? It is our mission to remove socioeconomic barriers to high-quality, excellent legal services. In addition, we also have the help desk at the Daly Center, which is on the lower concourse of the Daly Center, and the people, we are among the various pro bono organizations that staff that desk, and the people who are at that desk deal with child support, landlord-tenant matters, name changes, relatively short-term civil matters that can be handled relatively briefly. So if you think you have a matter that can be handled by the help desk, it's free. Just get there early in the morning and go down to the lower concourse. Now, turning to our show today, I have with me a special guest, Louis Plascencia. Mr. Plascencia is a certified public accountant. From an immigration perspective, I recognize how important it is to have accurate, high-quality services in the preparation of tax returns. This comes up in the context of adjustment applications, consular processing, naturalization, and if you are a sponsor for any of these people, you need to have an accurate tax return. So let me turn it over to Mr. Plascencia to explain what a certified public accountant is and how rigorously CPAs are trained.
Okay. Thank you, and thanks for having me on your show.
Our pleasure.
So what is a certified public accountant? What a certified public accountant is a credentialed professional, meaning they have a degree, at least a bachelor's degree, and in some cases a master's degree in business or accounting, and they've satisfied the test requirements. They took a comprehensive exam. The exam covers various topics, including tax law, business law, financial accounting, auditing, you name it, it's in there. So it's a very comprehensive exam. Once you complete the exam and you obtain the minimum experience requirement, you can get a license, a CPA license. In respect to what a CPA license is and in respect to taxes, well, a certified public accountant, what they can do, they can represent you in a tax audit. We'll talk a little bit about what a tax audit is a little bit later. But if you are being investigated, the CPA can actually represent you in front of the IRS if they're asking any questions regarding what's on your tax return.
Everyone is very excited about the new tax changes, but can you tell us when they take effect and what we should be aware of for this year and what we should be aware of for the coming tax year, 2019?
Well, the tax reform bill actually affects a lot of people, including immigrants, including individuals with I-10.
When is it effective? When does it affect people?
Well, it affects 2018. So the tax reform bill that you hear a lot about on the news, that was passed in December 2017, but it was effective this year, 2018 through 2025. Assuming Congress doesn't change any of the provisions in tax law, it starts 2018 this year and through 2025.
So does it affect the tax returns that we're going to be filing this April?
No, no. But funny you should ask that question. Congress did something interesting the last few months. They passed a 2018 tax bill in 2017. That's the tax reform I'm talking about. But they also passed a tax bill, a 2017 tax bill in 2018. Some tax professionals may be familiar with what I'm referring to. They passed a tax bill in 2018 during tax season that affected some tax returns that were already filed.
Oh boy.
Yes. Yeah, so a lot of tax return professionals, we had to call clients and tell them, guess what, you have to change your return because this affects you. And there's various provisions that does affect a lot of individuals.
Do you want to talk to some, a kind of, if it's possible, a relatively brief synopsis of some of the changes people should be aware of in the coming tax?
Under the tax reform bill, well, one of the biggest thing that was passed in the tax reform bill, they doubled the standard deduction. What a standard deduction is, it's a number that's used to compute your taxable income. To give you an example, currently the standard deduction for single, let's say it's $6,000. So under the tax reform bill, it went up to $12,000. So let's say head of household, the current standard deduction is $9,000. So under the tax reform bill, it went up to $18,000. So for marriage filing jointly, current standard deduction is $12,000. Now it's up to $24,000.
Well, that sounds good, but what's the trade-off?
Well, they took out another number out, exemptions. Exemptions are, it's like a deduction. It is a deduction. You get a deduction for claiming yourself. So you get an exemption for yourself. You get an exemption for claiming your spouse. And each individual that qualifies to be your dependent. And there's different set of rules on who qualifies as your dependents. There's qualifying child test and qualifying relative test. But assuming they meet to be your dependent, you can claim as for exemption test. So under the tax reform bill, that's out.
So if somebody, for example, has a lot of kids, they might be a loser instead of a winner with this bill.
Exactly. Even though the standard deduction doubled, but like you just mentioned, because of the exemptions are out the door, they're losing out as well. But they try to balance the bill. When it comes to tax law, they try to take benefits out, and then they'll increase certain benefits. And that's what they did with the tax reform bill. The child tax credit. The child tax credit under current tax law, which means anybody, any dependent under the age of 17, you get $1,000 tax credit. That's the current tax law. Under the tax reform bill, it doubled to $2,000. So it's another benefit. So it's something else that they put in place and to try to mitigate taking away the exemptions. They added a family credit, which is a $500 credit that works similar to a child tax credit. But one of the things that I want to mention regarding those credits, individuals with ITINs, individual taxpayer identification number, do not qualify for those credits under the tax reform bill. So that is going to impact a lot of immigrants. Immigrants tend to be the individuals that seek individual taxpayer identification numbers because they don't have a social security number.
That brings us to another topic, which is what do you see as the primary issues that affect immigrants? We see all the time, we see people who are seeking to adjust on the basis of marriage and have used the wrong status because they say, well, I can't get an ITIN number, so I'm filing as head of household or single. That's fatal if this is a marriage petition. If it's a marriage petition, it's married filing jointly. Similarly, you don't want to see, this is not the time to take deductions that are dubious or to add on dependents that are dubious. This is the time to be in the straight and narrow here when you're trying to deal with an immigration issue. I want to tell our viewers that at about 6:45, we'll be taking calls if you have any questions. So tell me, what do you see as the issues that affect immigrants particularly, and how you, what is an ITIN number, and how do you get it? Nobody wants to send their passport to the IRS.
Well, that's one of the main issues. Well, they don't have a taxpayer identification, or actually, they don't have a Social Security number to file a tax return.
Right.
But they need a number, an identifying number that the IRS would keep a record of. And that's the individual taxpayer identification number.
Well, let me ask you a question. Will they reject the tax return if it has no ITIN number on it?
Yes. So you need a taxpayer identification number to file a tax return. So if you have a Social Security number, that's the number that you use. If you don't have a Social Security number, you will need to apply for an ITIN. And as you alluded to, they will ask for original documentation, foreign documentation. So they'll ask for your foreign passport. So if you're a Mexican citizen, Mexican national, you will need to provide the original passport. Birth certificate would also count as well.
Is there anything a person can present in lieu of a passport? Nobody wants to send their passport, particularly if it has their I-94 in it, to the IRS.
Well, it can be, that's not the only documentation. It could be other documentation, foreign documentation, identification, I should say, that has a photo. An example of one would be a foreign voter's ID that has a photo of the matricular would be a good example of one. So as long as you have at least an identification with your photo and your birth certificate, that usually is sufficient to get an ITIN. The process, you complete the application with your tax returns. You submit the ITIN application and your tax return, and it takes several months for the IRS to process your application.
Another issue that often comes up is dependents.
Yes.
Because we get, when we review the person's case, we know that the government is going to be asking for your tax returns. It's reasonable to ask a person who's, for example, been here, are you paying your taxes? And then we look and we say, well, who are these dependents exactly? Who can be dependents? I think people are actually quite confused.
Well, when it comes to dependents, the rules are split into qualifying child tests and qualifying relative. Under both set of rules, the dependent must be a resident or a citizen of the United States, Canada, or Mexico. So let me talk a little bit about the qualifying child test. To be a qualifying child, dependent on the qualifying child, that person has to be related to you. There's an age test. So it's under 19 or under 24 and a full-time student, and also a self-support test. As long as the dependent does not provide more than 50% of his or her own support, it qualifies. And then the home test, that dependent has to be more than 50%, more than 6 months in your home. So and there's a couple of temporary absences, exceptions to the home test. So that's qualifying child. So that's one set of rules. But what if they don't meet because they don't pass all 4 tests? Then you go over to the qualifying relative test. The qualifying relative, first one is gross income. They have to have gross income less than the exemption amount, which in this year is $4,050. So wages, interest income, dividend income, the income has to be less than that amount. The second rule is as long as the taxpayer provides more than 50% of the dependent support, assuming the other tests are met, it qualifies. And the last test is relationship. That person has to be related to you or a member of the household for the whole year. So that's where it gets tricky. So you could, claim a dependent that lives in another country, assuming those tests are met. But with the test I just mentioned under qualifying relatives, the last one, that person has to be related to you or a member of the household.
Related in what way?
By blood. So that person is your sibling, sister, brother, your child, stepson. They're related to you by blood. Cousins, and this is where I was going with living with you for the whole year. Cousins are not considered related to you under tax law. So they may be considered your actual cousin, but they're not considered your cousins related to you under tax law. So in order for you for your cousin to qualify as your dependent, that person has to live with you for the whole year, because that person's not considered related to you.
Viewers, if you would like to call in with questions, we're here. We have an expert right here ready to answer your questions. So please feel free to call in. The number to call is right on your screen.
I think one of the things that you did mention in terms of key issues from your experience under immigration, I can also share my experience in terms of what does the IRS look at? What are items the IRS likes to audit? First, I guess I should explain what an IRS audit is. An IRS audit is an examination of your tax return. The IRS either it's random or there's certain items on the tax return that the IRS wants to investigate. Common areas, it can be a range of things. Filing status. Filing status is a common red flag for the IRS to look at. So if you're claiming the incorrect filing status, they may ask you to provide documentation as to the filing status that you use. Exemptions, as you mentioned, exemption is a hot issue when it comes to audit. And not just the exemptions, the tax credit that comes with those exemptions. Child tax credit, earned income credit. Earned income credit is a very hot topic for the IRS to audit. And also, other issues is, did they claim the right amount of income? Did they claim the right amount of it, the correct expenses? I'm sure people say all the time, I get paid under the table. Do I have to report it? Under tax law, yes. You got to report income from all sources.
At what level does a person have to start reporting income?
Well, as soon as if you find, this is funny, I share this story with clients and students of mine. If you find a wallet with money, doesn't matter the amount, you have to report it.
At what level do you start paying taxes?
Well, it all depends, because there's different, as long as you're over the standard deduction, and it varies if it's a dependent, or if you're single and you're claiming yourself, it's whatever the standard deduction is plus the exemption. If you're married, so it all depends on your filing status. It's the standard deduction for married plus 2 exemptions for each spouse. So it all depends. Just to give you a general idea, the current, for the purpose of this discussion, the current standard deduction for single is $6,000. And then exemption, let's just say it's $4,000, nice round number. So the filing requirement, in order for me, I'm required to file as long as my income is over $10,000. That's the $6,000 standard deduction and the $4,000 exemption. That's when I start generating taxable income. There are other rules. If you're self-employed, you have to file a tax return. It doesn't matter the amount. So if you're doing services for cash or services for anything of value, you have to report it on your tax return. So self-employed individuals, it's all income. They have to report it. Other individuals, it depends on the amount. But you should always file, especially if you're getting a W-2. If you're getting a W-2 and they're taking federal income tax withholding out, you want to file so you can at least recover some of the withholding back, especially if you have no tax liability. If you have no tax liability, you're going to get your federal withholding back. So in that case, you should file. So in short, I would recommend for anybody, as long as they get a W-2, you should definitely consider filing, if for no other reason is to get your withholding back, and that includes dependents.
Viewers, please feel free to call in with your questions. Let me ask you something. I'm not sure I understood this correctly. You mentioned that the child tax credit will no longer be available to undocumented people. Is that what you mentioned?
Correct.
Is that true when the child is a U.S. citizen as well?
If the child has a Social Security number, well, if the child has a Social Security number, they would qualify for the child tax credit. The rule is if the child does not have a Social Security number, then they won't get the tax credit. Under current tax law, 2017 and prior tax years, a dependent that has an ITIN does qualify for the child tax credit. Going forward, it doesn't. So something else that I have seen my clients being affected, those that have ITINs, I see they're not going to get the child tax credits going forward in 2018 and beyond through 2025.
Are there any other provisions that you think particularly target immigrants?
Well, and not just immigrants. I think in general, the changes on the standard deduction, as I just mentioned, just to give you an idea what the purpose of the standard deduction is. Again, that's just a number that you get depending on your filing status to compute your taxable income. Some individuals that have homes, they do what's called an itemized deduction. They claim itemized deduction, and the way that it works if the sum of your itemized deduction is greater than your standard deduction, you get the itemized deduction. So right now, a lot of people claim the itemized deductions. Just to give you a general list of what the itemized deductions are: medical expenses, mortgage interest, real estate taxes, state income tax, and charity. So the sum of those deductions would have to be greater than the standard deduction. So think about the thresholds. So right now it's single $6,000, head of household $9,000, married filing jointly $12,000. So right now in the current tax law, it's easy to go over that hurdles to itemize. Under the new tax law, it's going to be harder to itemize because you're going to get the standard deduction of $12,000 if you're single, $24,000 if you're married filing jointly. Now you got the aggregate of all those expenses would have to be greater than that number. So that doesn't just affect immigrants, it affects all taxpayers, especially taxpayers that have itemized deductions below that threshold. They won't be able to claim it anymore. That's not to say they should stop paying their mortgage, they shouldn't buy a house. They should continue paying their mortgage, it's just they won't be able to get a deduction going forward.
Immigrants are a generator of business. Many, many immigrants set up small businesses. How does this tax reform affect small businesses?
Well, the tax reform bill has a lot of benefits for businesses. Again, going back to filing a tax return, you got to claim the right amount, the correct income. So that's a starting point. And then there's a list of deductions on what qualifies. Bonus depreciation. If you buy equipment, there's 100% bonus depreciation for the first year. You can deduct the first year instead of recovering the cost over 5 years. Section 179 went up to $1 million. That changes. There's also another common one. Some of you may hear about this with your tax return preparer. A flow-through deduction. That's a 20% deduction on the qualified business income. If you're self-employed or if you have an S corporation or a partnership, you qualify for that benefit. So again, that doesn't only apply to immigrants. It applies to anybody who has a business.
So how would you summarize this bill in terms of winners and losers? What would you say about it?
How would I summarize it? Well, the way I like to look at it when I'm discussing this in class or when I'm discussing this with my clients, I feel like I'm a bipolar accountant. And here's where I'm going with this. It sounds pretty funny. I'm happy for my business clients because there's a lot of deductions, more than the ones I just mentioned, so good for them. Business clients, corporate clients, I'm happy for them. But then I'm not so happy with my individual clients. Those provisions that I just mentioned, a few individuals are going to itemize, so that's why I don't feel too happy about those individual clients. And also the effect that it has on immigrants, the I-10s being one, and the same thing about exemptions. They can't claim somebody as an exemption anymore or get that new family credit. So it benefits businesses for the most part, there are some benefits for individuals. And also the other side of it is, believe it or not, there are going to be some individuals that are going to be paying more in taxes under the tax reform bill.
Oh, I think I know about that.
So yeah, it's I guess just like any tax bill, there's good and bad. There's good and bad in a tax bill. But one thing you need to know in terms of the tax bill, it's a revenue bill, and that's why they take out a lot of tax benefits. They have to find a way to generate revenue, to increase revenue so the government is not broke, which is a different issue altogether.
So let me begin to wrap up here. I think we forgot to mention that Mr. Plascencia is not only a certified public accountant in private practice, but he's also a professor at Harold Washington College. So if you want to learn from him, that's the place to go to take his courses. I am interested to know if any of the viewers have any questions. We're open for questions. Other than that, I think you've just been privileged to listen to a wonderful speaker talk about important issues. Is there anything else that you would like to add?
Well, thanks for having me on your show again. I enjoy being on your show. And for those of you watching, thanks for your undivided attention.
Well, thank you. And I hope that if you have any legal problems that we can help you with, you will feel free to call the Chicago Legal Clinic. The number is here, 773-731-1762. That's our intake department, and then you call them and then they route you to the correct attorney. So if we can help you, we're more than glad to help you. We cover a wide range of topics, and I love doing immigration law, so I hope that if anyone is listening and has immigration issues, you'll feel free to give us a call. So thank you. It was a pleasure to have this show, and I appreciate your watching it also. So thank you so much, and please tune in. We are on Wednesdays, once a month, so stay tuned for the next show, which will probably be another interesting topic too, with another important speaker. So thank you so much.